The S&P 500 and Nasdaq hit record highs for the fourth straight session as wholesale inflation ticks lower in May against expectations of a rise in prices. Stocks in the Asia-Pacific trade largely lower ahead of the Bank of Japan's policy decision, the GIFT Nifty suggesting a muted start for the Indian market. Crude remains range-bound. Brent continues to trade around $82 a barrel despite a surprise build-up in U.S. inventory. Gold prices hover around $2,300 an ounce. Adani-owned Ambuja Cement will acquire 100% stake in Penna Cement at an enterprise value of more than 10,400 crore rupees. The deal gives Adani significant footprint in western and southern India. This is the second major acquisition after Sanghi Industries since entering the cement business 2 years ago. The G7 countries reach an agreement to mobilize $50 billion of aid for Ukraine from seized Russian assets. The US and Ukraine also signed a 10-year bilateral security agreement at the summit. PM Narendra Modi too has arrived at the summit. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. It's a Friday morning and we are getting into a long weekend as well. So let's talk about all the major headlines and news pieces as well. But first up, as always, let's take a look at the Asian markets. Now remember, the street is awaiting the Bank of Japan decision, and ahead of this, there is some nervousness in the Asian markets. So the Taiwanese index is down 46 points. We have the Hang Seng, which is sitting with cuts of around 85 points. It's largely a red-looking screen in the Asian markets, barring Kospi, which is up around 0.12%. The Nikkei too is lower in trade right now, so we have that sitting with cuts of around 0.06%. Not much, but yes, there is some cut that we are seeing, and that big decision in terms of Bank of Japan's rate decision is something that we'll be awaiting. GIFT Nifty absolutely flat with some positive bias, but yes, looks like that could be the move for our own markets today as well. With that, let's move on and talk about the US markets because Wall Street ended Thursday's trading session mixed. The Dow Jones closed 65 points lower, while the S&P closed around 0.25% higher. The tech-heavy index Nasdaq also rose nearly 60 points. And in stock-specific news, shares of chipmaker Broadcom surged more than 12% after the company reported second quarter numbers that beat expectations and also announced a 10-for-1 stock split. And the big cue from Wall Street was the producer price inflation report that saw wholesale prices unexpectedly fall for the month of May. Adding to more evidence that inflation in the US economy could be pulling back, CNBC's Rick Santelli has a roundup of the numbers.
Wholesale inflation for May expected on a headline to be up 0.1, is down 0.2, but not time to celebrate yet. We are down 0.1 in March. We're down 0.3 in October of last year, to put some context there, but it is definitely in the right direction if you're looking for less inflation. If we look at ex-food and energy, unchanged, much lower than expectations, and in the rearview mirror, we were 0.5%. Zero is the lightest, and once again, it was minus 0.1 in March of this year. So it's a big improvement based on expectations, but to some extent, been there, done that. Now, ex-food, energy, and trade, well, that's unchanged as well. In the rearview mirror, 0.4 becomes 0.5. Unchanged on there. Comps too, minus 0.1 in November of last year. Now let's look at the year-over-year numbers, shall we? And I think sometimes these are the most important. 2.2% year-over-year headline. We're expecting a number at 2.5%, but this does match the rearview mirror, which was 2.2, and 2.2 back to back. Now 2.2 last month, just revised to up 2.3. So we have 2.3 last month, 2.2 this month. To kind of give it some context, 2.3 comp was April of last year, 2.7 was March of last year. Let's food and energy, take those out, 2.3% on a year-over-year basis, 2.4 last month, so 2.3, that drop is nice. We're at 2.1 in March of this year. And finally, ex-food, energy, and trade, this one went up. 3.2. Last look was 3.1, now revised to 3.2. So back-to-back 3.2s. Those are the highest levels since 3.4 in April of 23, almost a year, a little over a year, excuse me. The net change of this shouldn't be shocking. It seems as though investors always gravitate to some of the better news on inflation. Interest rates have moved down a bit on that. We're at 4.25 on a 10. We're at 4.29 prior. We were at 427 yesterday before the Fed statement was read. If you look at two-year notes, they've moved from 473 down to 466. A nice move. They were at 468 pre-Fed to put a face on it. So whether it is the notion of higher continuing claims, higher initial claims, meaning the labor market's giving a bit, maybe that's more where the kick came from in terms of yields and pre-opening equities, which have improved. Back to you.
Okay, that's all about the US May PPI numbers. So let's stay with Wall Street. Let's also listen into a host of market experts and economists on their views on what they think could be Fed's next move and the outlook on US economy as well.
If you take a vote even right now, as I said, most of them didn't change their vote because they had put their vote in. I think you'd get more people on two changes than one change, and all we need is, one more good report, and I think we'll have it. I think the danger is if the real economy slips. Now, I know we got good payroll, household wasn't as good, unemployment up to 4%. Is Powell ready to go fast enough, or is he going to go, 20, tee it up, 25 basis points, 25 basis points? Don't forget, we did inflation going up on 75. He has to be reactive. He can't be setting up things all the time. Sometimes he might have to surprise the market if things do soften.
Remember, they had the CPI number yesterday and still didn't change their forecast for, perhaps one cut this year. Secondly, I think they're still clearly stating that they need to see more data in the same direction before getting comfortable. So, if there's a cut this year, I think September is the first chance for them to feel sufficiently comfortable. This incoming data, I think, sort of is another building block in the direction of getting comfort. But recognize, back at the end of last year, I think people were very comfortable, and then suddenly we had the first 3 months of this year. So I think you're going to be cautious. This data does not swing the pendulum dramatically. It moves them in a direction in which they want to go, but they're not there yet.
I think they still have a bias to cut. Look, you're comparing it with going up. I think the notion that they're going up was a will-o'-the-wisp and is gone, basically. So yes, they have a bias to cut. I think they're still haunted, frankly, by the mistake they made way back at the beginning of this process of not going up fast enough and letting the inflation rise more than anybody, certainly the Fed or anybody, wanted. That memory lingers on, and I think that's in large measure, what's holding them back. But to your point, yeah, the next move is going to be a cut. And the question is when, and frankly, though you didn't ask, I would throw my cards in with the two cuts still this year. We'll see.
Okay, the expert still thinks that Fed could cut rates twice this year itself. But that's the global market action. How will these overnight cues impact our own markets? We have a research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning and happy Friday to all of you. We are entering that long weekend as well. But Hermaz, let me come across to you first up. What is the market setup looking like today?
You said it right, Sonal, and it's indeed a good morning. The street also is looking forward to the long weekend more than the setup. But yes, it's been a good week for the Nifty. We've been making newer highs, heading towards that 23,500 mark. But the only problem is being that we're not being able to sustain at those higher levels. Now, every day, 3 out of the 4 trading sessions, we've made record highs this week. But in almost every session, we have reversed by at least 100 to 150 points from the highest point of the day. So, despite making newer highs in 3 out out of the 4 sessions so far this week. The Nifty is still almost just only 0.5% higher for the week. The bigger problem though is the Nifty Bank. While the Nifty is still managing to hold on to some bit of gains, the Nifty Bank is not doing that either. So now the Nifty Bank continues to face resistance at that 50,000 mark, and it is absolutely flat for the week. Now, so for the Nifty to move higher as well, that support needs to come from the Nifty Bank, and the Nifty also is stuck in this 23,400, 23,500 range, which is said to be the congestion zone. But despite the the benchmark indices being in some bit of consolidation, the broader markets are doing very well for themselves. The mid-cap index is up 11% from the drop that we saw on the 4th of June. The small-cap index has done even better, is up 14%. The PSU index is up 13% as well. As I mentioned, some of the key levels to watch. Yesterday's high on the Nifty will be the first one, 23,480, then 23,500. Of course, the Nifty Bank remains 50,000. It has remained so for the last few trading sessions, and the PSE index is one that I want to highlight as well. 11,331 is that level to watch out for. If you cross that, then you would have reversed all the losses that you made on the 4th of June. We are around 600 to 700 points away from that as well. We'll continue to watch out for real estate stocks today, because those are the ones that have been outperforming through and through, and sugar stocks that were buzzing in yesterday's trading session. We'll see if that move continues today as well. With all the major events done now, there are lack of triggers for the market to move higher as well. So it won't be a surprise if we see another quiet session today, considering we are heading into the long weekend. The US markets also don't have much to write about, and the GIFT Nifty, as we see, is indicating a mildly positive start for our markets as well.
Okay, all right. That's what's happening with the market setup. Thank you so much, Ormas, for that. Let me go across to Vamakshi. She'll list out all the stocks that are in focus today. Good morning, Vamakshi.
Well, good morning, Sona. Let me first start off with Ambuja Cements. So they have announced that they will be acquiring the entire stake in Pennar Cement Industries for almost 10,422 crores. Vodafone Idea also on our radar. The board has approved raising up to 2,458 crores via shares. They will be allotting shares worth 1,520 crores to Nokia Solutions and 938 crores to Ericsson India. Puravankara also on our radar. The board has approved raising funds up to 1,000 crores via QIP. Havells will be expanding its manufacturing facilities of AC at Gilot as well as Sri City locations to 15 lakh units per year each. The proposed investment for this capacity expansion is anywhere between 50 to 60 odd crores, and this investment is largely expected to be funded through internal accruals, and the expected date of completion for this entire capex is around 4th quarter of FY25. Nalco, watch out for that counter as well. They've executed Putangi bauxite mining lease deed with Odisha government for around 700 acres area. The mine has an annual production capacity of nearly 3.5 million tons, and the mine has a reserve estimated at almost 111 million tons. Nalco says that the mine will be operational soon. Signature Global is another stock that we will be watching out for. Its arm Sternal Bilcon will be buying land parcel of approximately 4 acres on Dwarka Expressway. This land parcel overall has a development potential of approximately 6 lakh square feet. SEPC, watch out for this counter as well. They will be considering fundraising plans on June 19th. RITES has signed an MOU with DMRC for exploring consultancy as well as operation and maintenance for metro rail systems. Lastly, let's also focusing on Zaggle Prepaid. They've signed an agreement with Skydo Tech. They will be facilitating cross-border payments for Zaggle corporate customers. So overall, on the back of these news flows, watch out for all of these counters.
Okay, that is a long list, but thank you so much, Vamakshi, for joining us with those details. Let me go across to Manglam. He's joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So it's pretty simple. You know, the frontline indices see consolidation, whereas the broader markets continue to rally. And that's not particularly bad because portfolios feel a lot better. Yesterday as well, if you look at the Nifty as well as the Nifty Bank, they crossed, for the Nifty at least, it went perilously close to that 23,500 mark, but closed just under 23,400. The Nifty Bank for a large part of the day was above 50,000 and thereafter saw a decline as well. The mid caps and the small caps continue to do well. What's interesting is that the cash market flows, they continue to be, mixed by a lot of these large trades that we're seeing, which are back in the vogue. So FI sold about 3,000 crores, DI sold about 550 crores. But remember, this was impacted by two large trades, L&T Fin, and we had Senco Gold as well, where SEF Partners sold their stake in the company. What is persistent and unequivocal is the way FIs are covering shorts and adding longs, and as a result of which we have seen another 2,700 crore worth purchase in index futures by the FIs, 27,000 long contracts being added, 18,000 short contracts being covered. And if you just take a look at, the positioning now, it's nearly an even keel. The FI longs have increased all the way up to 46%, with shorts being around 54%, and the net exposure is down to 34,000 contracts. I mean, just 8 sessions ago, this was 3.11 lakh contracts. So that's the ferocity with which, longs have been added and shorts have been covered. Importantly, the India VIX is mirroring consolidation, and that's what we've seen. It's down below 14 as well. And yesterday too was, ending at the low point of trade. And what is this consolidation likely to be in terms of a range? The 23,400 call has been equally active, and as we've seen the market see support at lower levels, 23,300 put has been active. So a premium of almost 100 rupees on each tell you 23,200 to 23,500 is the range that the street is looking for on the Nifty, unless there is a big move on either Nifty Bank or Nifty IT to break out or break down of that range. Stocks in focus. Sun TV has entered F&O ban, and also Balrampur Chini, after the big rally that we saw in sugar, has exited F&O ban. So that is something that we'll keep on our radar.
Both these stocks have been surging off late, right? Thank you so much for that, Mangalam. That's our Power Prep segment. Time for a break, but before that, we'd like to thank all our viewers for your continued support. CNBC TV 18 recorded a viewership of 93% on counting day, the most unbiased and accurate coverage. Stock markets were reacting to the votes being counted. We had a viewership of 91%. CNBC TV 18 beat competition by a massive margin. From investors to India Inc., the CNBC TV 18 election headquarters was the go-to for election insights. Once again, thank you for your trust and faith in CNBC TV 18. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. And as preparations for the union budget begin, industry body CII has released a wish list. A 25% hike in the government's capital expenditure is the top demand. Shivani Bajaj is here with more on what India Inc. wants from the budget.
CII has come out with its key recommendations from the new government. Amid the biggest asks by the industry body CII is a 25% hike in India's capex to drive growth and global competitiveness. CII has also urged the government to simplify direct taxes and rationalize TDS provisions by reducing rates and creating a small negative list. CII has also called for a consistency in capital gains tax rates and holding periods for different financial instruments. Sanjeev Puri, who took charge as the new CII chairman here in Delhi today, emphasized the need for a 3-rate GST structure, inclusion of petroleum products, electricity and real estate under the GST regime, and a 3-tiered import duty structure also. He also highlighted the importance of operationalizing the rupees 1 lakh crore R&D fund announced in the interim budget, evolving a regulatory framework for the artificial intelligence and updating the 2007 design policy. On the healthcare front, CII seeks a roadmap to increase public expenditure to 3% of GDP. The industry body has also sought a roadmap to increase public expenditure on education to 6% of GDP. CII has asked the new government to set up a task force, including the Niti Aayog, the Ministry of Education, the state governments and industry, for tracking NEP implementation statewise.
Okay, Shivani, thank you so much for joining us with those details. Let's in fact listen into what Sanjeev Puri, who's the president at CII, had to say on the budget wish list.
We are strongly advocating is that from where it is for last year, another 25% increase in capex. It's sitting at about 16.8% in the interim budget, but we believe 25% will provide the good boost to the economy. So we are suggesting rationalization of TDS provisions by reducing the number of rates and having a small negative list, and also to rationalize capital gains.
Okay, all right. So that's the big budget wish list. We'll keep getting you more updates on this one. But let's shift focus to commodities. Manisha Gupta is joining us as always with all the updates. Manisha, what's buzzing in the commodity space?
Well, crude oil prices is something that I would keep an eye on, while the overnight markets have been slightly weaker. But for the week, we are up by 3% for the crude oil prices, and these gains come in after 4 weeks of constant losses here. Well, it is about the global demand forecast, which has been on the higher side for the rest of 2024. That is what seems to be supportive. And then there are statements from Russia which says that even as their production for the month of May has been higher, but they will comply with output obligations with OPEC and allies. So these supply curbs is what seems to be supporting the markets. When it comes to metals, well, this is going to be 1 week where we are looking at decline in most of these metals. The US dollar on a higher side, and the fact that the FOMC members have projected one rate cut in 2024 has led to a bit of a profit taking there. Also, when you look at the gold prices, well, China buying has been absent in the month of May, weighing on gold prices. Silver is down by 0.5% in this week. Copper prices, after hitting a high of all-time high of $11,000 a ton, have fallen yet again below 10,000 right now. So many of these metal prices really struggling to keep with their recent highs.
Okay, all right. So some profit booking is what we are seeing. Thank you so much, Manisha, for joining us as always and telling us what's happening in the commodity space. We'll slip into a break. When we come back, Adani-owned Ambuja Cement will acquire 100% stake in Penna Cement at an enterprise value of more than 10,400 crore rupees. We'll get you more on the deal and analysis after this short break. Stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV 18, and its second biggest ticket acquisition since entering the cement business 2 years ago. The Adani Group will buy Penna Cement for an enterprise value of about 10,400 crore rupees. Nigel is here to give us all those details. Nigel.
Well, that's right. Adani Group has acquired Penna Cement at an enterprise value of 10,400 crores, which will be funded via internal accruals. From Ambuja Cements, well, it adds close to 14 million tons. It's taken its total capacity to around 89 million tons, and it puts them on track to hit around 140 million tons by 2028. It also improves Adani Cement's market share pan-India by around 2%, and in the south by close to around 8%. Now, Penna Cement's capacity is located in Andhra Pradesh, Telangana, as well as Rajasthan. The total is close to around 14 million tons, of which 4 million tons is currently being completed. Additionally, 90% of Penna's cement capacity comes with railway sidings, and it's also supported by captive power plants and waste heat recovery system. Now, moving to the valuations. Valuations are done at roughly around $90 per ton on a capacity of around 14 million tons. But the management says that there is surplus clinker at their Jodhpur unit, and so it can support another 3 million tons of grinding cement capacity. So for this 3 million tons, they may have to incur a number of roughly around 800 to around 1,000 crores. Which means that the deal is done at an EV per ton of around $80 per ton if you're assuming 17 million tons. That's 14 plus around 3 million tons that could come up. So to sum things up, it's a good deal for Ambuja. As its cash is getting utilized, that will help the return ratios and also helps them to move to around the 140 million tons target. We could also see a positive rub-off on smaller names. Sagar Cement, NCL, KCP, India Cements, Orient Cement, all of them have some exposure to the region and trade at lower valuations. And finally, could this result in additional competition in South India? If that is the case, then Ramco and Dalmia's dominance could be challenged. So let's see how it works out. For the time being, that's the big deal that's been announced overnight.
Okay, all right. Yes, that's the big deal. Thank you so much, Nigel, for joining us with all those details and the analysis as well. Moving on to some international news now. Leaders of the world's largest economies have arrived in Italy's Puglia for the G7 annual summit. From geopolitical tensions on the back of two ongoing wars to climate change to Africa, the three-day forum promises to be a busy affair. Prime Minister Narendra Modi has also arrived, and this is his first international summit after assuming office for the third term. The Prime Minister has a busy schedule as bilateral summits lined up with US President Joe Biden, UK Prime Minister Rishi Sunak, French President Emmanuel Macron, and heads of states of Italy, Germany, and Japan. And the big headline from the summit so far is US and Ukraine have signed a 10-year bilateral security agreement. G7 leaders also agreed to mobilize $50 billion of aid for Ukraine from seized Russian assets. NBC's Monica Alba joins us with the details.
President Biden had a series of meetings at the G7 summit here in southern Italy today, many of them focused on the war in Ukraine. And the G7 leaders came together today to say that they would approve a plan to use frozen Russian assets to try to get Ukraine a loan in the form of $50 billion to help with its fight against Russian aggression, and to use that also with an eye toward rebuilding the nation, since so much of it has been devastated during this war that has now stretched on for more than 2 years. And President Biden appeared in a joint news conference with President Zelensky where they reiterated that commitment in the form of signing a bilateral security agreement that is going to last for 10 years, that will continue to pledge this assistance from the U.S. to Ukraine. And during the course of that news conference, the president was asked about his son, Hunter Biden's conviction on felony gun charges this week. And he gave his first on-camera response to say that he is proud of his son and that he has battled with addiction. But he reiterated what he had said in a prior interview about having no plan to pardon his son, Hunter. And he was then asked at the end of the news conference about whether he could potentially commute that sentence. And he also replied, no. Back to you.
Okay, all right, that's the big update from the G7 summit so far. We'll keep getting you more updates. But for now, we'll take your leave on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next with all the market updates.